Welcome to my channel. Today, we're diving into a topic that's often considered a cornerstone of financial success: buying a home or property. Is it always the smart move it's cracked up to be? Let's explore why this traditional path to wealth and success might not be the best choice for everyone. Have you ever felt pressured to buy a home because it's seen as a mark of success? Let's start by looking at why owning a home or property has long been seen as a symbol of wealth and stability. This idea isn't new. It's been around for centuries, deeply embedded in many cultures worldwide. Historically, owning land was directly linked to wealth and social status. In many societies, it was the landowners who had the power, the influence, and, crucially, the financial security. Fast forward to today, and this view has evolved but not entirely changed. Owning a home is often seen as a major life milestone, a sign that you've made it. It's perceived not just as a financial investment, but as a personal achievement, a symbol of stability in adulthood. Parents encourage their children to buy a home, seeing it as the safest and most reliable way to secure their future. This perspective is also reinforced by media and societal narratives. Think about it. How many times have we seen success stories that end with buying a dream house, or advertisements suggesting that happiness and fulfillment come with home ownership? This narrative builds a powerful psychological link between owning property and achieving success and stability in life. But here's the thing. While this perspective has its roots in valid historical and cultural contexts, it doesn't necessarily hold true for everyone in today's diverse and rapidly changing world. And that's what we're going to explore next. When we peel back the curtain on the dream of home ownership, we find a reality filled with substantial financial commitments. First and foremost, there's the mortgage, often the largest debt most people will ever take on. A mortgage is not just about paying back the principal amount. It's also about the interest, which can add up to a significant sum over the years. But the financial responsibilities don't end with the mortgage. There's also the ongoing maintenance. Owning a home means you're on the hook for all repairs and upkeep, from minor fixes to major issues like roof repairs or plumbing problems. Unlike renting, where the landlord often shoulders these costs, as a homeowner, every repair is a direct hit to your pocket. Then we have property taxes, which can be substantial and tend to increase over time. And let's not forget about homeowners insurance, which is necessary to protect your investment, but adds to the monthly outflow. But perhaps the most challenging aspect of homeownership is the unexpected expenses. Things like emergency repairs or major appliance breakdowns can happen without warning, requiring immediate financial attention. These unforeseen costs can be a significant strain, especially if you're not prepared for them. All these financial commitments can tie up a substantial portion of your resources, reducing your financial flexibility and liquidity. The money locked up in home equity isn't easily accessible and can't be quickly converted into cash in case of an emergency or an opportunity. In contrast, liquid investments can be much more responsive to your immediate needs or changing life circumstances. This isn't to say that home ownership is financially imprudent. For many, it's a valuable long-term investment. But it's crucial to understand the full picture of the financial responsibilities it entails and how it impacts your overall financial flexibility and opportunities. In the world of investing, opportunity cost is a crucial concept. It refers to the potential benefits an investor misses out on when choosing one alternative over another. So, when you invest a significant amount of money into a home, you're not just committing that money. You're also forgoing all the potential gains you could have made if you had invested that money elsewhere. Let's break this down with an example. Imagine you have a certain amount of money for investment. You can either use it as a down payment for a house, or invest it in the stock market, bonds, or maybe even start your own business. Each of these choices has its own potential returns and risks. Real estate is often seen as a safer investment, with the added benefit of providing a place to live. However, the returns on real estate can vary greatly depending on location, market conditions, and a host of other factors. Historically, real estate appreciation rates have been relatively modest, especially when compared to the potential returns in the stock market. Now let's consider the stock market. Investing in stocks or mutual funds, for example, can offer higher potential returns, albeit with higher volatility. Over the long term, the stock market has tended to provide significant returns, outpacing real estate in many cases. Additionally, stocks are more liquid than real estate, meaning you can sell your investment and access your funds more quickly if needed. Bonds, on the other hand, are generally seen as less risky than stocks, but offer lower returns. They can be a good way to diversify your investment portfolio and provide a steady income stream. And then there's the option of starting a business. This can be the riskiest investment of all, but also offers the potential for substantial returns. Not only does it have the possibility of financial gain, but it also offers personal satisfaction and a sense of accomplishment. This is the essence of opportunity cost in investing. It's crucial to consider not just the potential returns and risks of buying real estate, but also what you might be missing out on in the broader investment landscape. Homeownership, traditionally seen as a hallmark of stability, isn't necessarily a one-size-fits-all solution, especially in our increasingly mobile world. Consider the lifestyle of digital nomads or those in careers that require frequent relocations. For these individuals, the flexibility to move without the burden of selling a property is invaluable. These are people who leverage technology to work remotely and live a location-independent lifestyle. For them, the idea of being tied down to one location because of owning a property is often unappealing. The freedom to travel, explore new cultures, and work from different parts of the world is a core aspect of their life philosophy. Owning a home could significantly limit this flexibility and mobility. Then, there are those in careers with frequent relocations, military personnel, corporate professionals, or even academics. For them, renting can offer the much-needed flexibility to move for a new assignment or job opportunity without the hassle and financial implications of selling a home. Moreover, life stages play a crucial role in housing decisions. Young professionals might value the flexibility that comes with renting, allowing them to explore different cities, career paths, or even lifestyles without the commitment of a mortgage. On the other hand, older adults might prefer the stability and sense of community that comes with long-term homeownership. Renting also provides the freedom from maintenance responsibilities and the associated costs. For many, this freedom from upkeep, repairs, and property taxes are not just a financial relief, but also a lifestyle choice that allows them to focus their time and resources on other pursuits, be it travel, hobbies, or career development. In essence, homeownership is a significant commitment that may not align with the lifestyles of those who prioritize flexibility, mobility, and minimalism. It's important to recognize that the traditional path of buying a home isn't the only way to achieve personal or financial success. Life is diverse, and so are the paths we choose to walk. In this part, I want to challenge a deeply ingrained notion that the true measure of success and wealth is solely through the ownership of real estate. This traditional view, while valid for some, overlooks the rich diversity of what success and wealth can truly mean. Firstly, let's consider the value of experiences. In recent years, there's been a growing appreciation for the richness that experiences, travel, learning, cultural immersion bring to our lives. These experiences often contribute more to our personal growth and happiness than material possessions. The memories created, the skills learned, and the perspectives gained can be far more valuable than the tangible assets of a house. Then there's the aspect of time freedom, a form of wealth that's becoming increasingly sought after. Time freedom means having the flexibility to manage your time according to your values and priorities, be it spending more time with family, pursuing hobbies, or engaging in personal development. This kind of wealth allows for a balanced, fulfilling life that isn't necessarily achievable through traditional means like homeownership, which often comes with time-consuming responsibilities and constraints. Personal fulfillment is another crucial aspect. This can come from pursuing a passion, engaging in meaningful work, or contributing to a cause greater than oneself. The satisfaction derived from these endeavors often surpasses the sense of achievement associated with owning property. It's about creating a life that's aligned with your personal values and aspirations. So let's broaden our perspective and acknowledge that wealth and success are multidimensional. They're not just about assets and material possessions, but also about the quality of life, personal satisfaction, and the freedom to live on one's own terms. I encourage you to think about what truly matters to you. What does success look like in your life? Is it tied to owning property, or is it something more personal and unique to your journey? Remember, the path to success and wealth is not a one-way street defined by real estate ownership. It's a diverse landscape filled with multiple paths, each leading to different, equally valuable destinations of fulfillment and achievement. Do you think buying a home is the ultimate financial goal? Or do you have a different perspective on success? Let's talk about it in the comments. Thanks for watching, and as always, see you next time.
If you're enjoying the content on this channel, please take a moment to hit the like button and subscribe to